Today is August 11th, 2022. The reason why, let's put all this in the context why I give you guys the news every day. Well, if you're watching the channel, you're probably either in the mortgage business, you're a realtor, or you're a home buyer out there looking to buy a house or get the options or when is a good time to buy. So what I try to do on my channel every day is to give you guys the news to show you what's going on with real estate, the facts, and then also what's going on with mortgage rates, because that plays a huge role in buying your property. So what I go over every day is the economic calendar. What news is in the market right now that's affecting mortgage rates? Because if you're watching the channel, mortgage rates play a huge piece of this puzzle. So let's get over to the headlines and see what it has to say for us today. So right now we see wholesale inflation rates coming down. Okay, so why do we care about inflation? Why do we care about what the Fed's doing? So let's put it all in the context. If you're looking to buy property or real estate, the biggest things driving the market right now is supply demand in the housing market. And then the Federal Reserve is stepping in saying the market's too hot. We need to cool down things. So they're looking to push up interest rates. Why? Okay, the biggest culprit is you see in every headline that you see is inflation. Well, what really is inflation? You think of it and you say, well, the gas prices are up and food prices are up, but what does all this really mean to me? Well, let's get to the economic calendar so I can make some sense to you. So the economic calendar, what we have today, and again, I'll put all this in the context for you in a second, is raising rates. Why are rates going up? The economy's too hot. Okay, the economy's too hot. So the Federal Reserve is in there pushing up rates on everything. Okay, so mortgage rates are spiking up, consumer rates are spiking up. You can see credit cards rates are spiking up, making more things more expensive. All right, and that's going to hopefully cool down people's spending and buying and everything else. So that's what they're doing, and it's working. Okay, so we're starting to have inflationary numbers on the consumer level, and what we have today is on the producer side of the equation. It's all starting to come back down. Okay, so that was the context or the thumbnail today is how is mortgage rate or the Federal Reserve raising rates helping the housing market? Well, it's cooling down the demand because house prices are getting way out of whack. And then the double whammy is interest rates are going up on top of that. They've almost doubled, or they basically doubled so far this year, putting house affordability way out of whack. So we basically applaud a lot of these numbers starting to come back down to cool off the economy. So let's get to it. So what we see in the last 2 days is this. The Federal Reserve, again, their whole goal is to curtail inflation, all right, and the drive down demand on housing and everything else. So you're starting to see here it's working because what it's doing is starting to push down everything, the prices of things. But the one caveat here is, and why I watch oil is the biggest piece of the inflationary puzzle. But we saw yesterday the consumer right here, the consumer price index, how much we are paying extra it came down quite a bit. Okay, more than analysts expected. Actually, at its core level, the CPI month over month was flat, zero. So President Biden came out yesterday and said the inflation rates right now are zero from month over month. And that's accurate. Okay, but that's not painting the whole picture behind things, but it's a start. The next thing is we have today. Look at the economic calendar today. Now, on the producer side of the equation, meaning they're starting to get their raw materials and everything else that it's involved in creating something, their costs are going down. One of the biggest pieces of this puzzle is oil. And I keep stressing that every day because as the prices come down in oil, prices are going to follow suit all over the place. Okay, so that's what we see right here. So not only is consumer prices starting to ease because of oil, we're starting to see at the producer side of the equation, it's helping as well. So what is inflation? So today's economic teaching is inflation in the Fed and how that is helping or how that will help us in the housing market. Okay, so what is inflation? What actually is inflation? Well, inflation is the rising price of things, of commodities, everything that you buy. But let's read the definition so everybody gets it straight. Inflation is a rise in pricing, which can translate as a decline in purchasing power. Okay, so basically prices go up right, making your dollar less valuable. So that's why you see not only in real estate, but you see the stock market when they're applauding these numbers. Yesterday we saw the stock market up, I think it was almost 1,000 points. Okay, today the number came in on the producer side of the equation. It came in kind of lower than expected as well. Thus, now the stock market's rallying. Why is that? Okay, so let me put this in the context for you. Inflation basically drives up the prices of everything, makes your purchasing power less. So on the corporate side of things, why the stock market's going up is they're saying, well, the Federal Reserve can actually now step back a little and not keep raising rates up and up and up. Okay, so now on the consumer side of the equation, when we don't feel confident in the economy and our dollar isn't going anywhere, we start spending less. Okay, when we start spending less, what's going to happen? There's going to be a spiral effect. Companies will have to produce less because there's not as much demand. Okay, so now let's watch how this snowballs through. So the price of everything goes up. That really pulls back your spending patterns. Okay, so when your spending patterns go down, you're not buying as much stuff. If you're not buying as much stuff, the employer doesn't need as many employees. So they start easing or start laying off people. That's the creation of the recession piece. When all the numbers start to go down, but the jobs numbers really start to pull back down. So we don't have the job numbers right now. They're playing a whole different role in this because a lot of people had excess money in their pockets and in their bank accounts due to the stimulus packages in the last few years. But now that's starting to cease. They're starting to go dig into their savings accounts, and that now they're like, okay, we don't have that much money left. So now we got to go back into the workforce. And then that's what creates all this stuff. So let's put this in context. What the Federal Reserve is doing is they're going out there and they're raising rates to cool down the economy. The one piece of the market that hasn't really adapted yet is the jobs market. Okay, but this is good news because why? Well, now the estimates are out there saying, well, is the Federal Reserve, do they have to continue to do what they're doing right now by jacking up interest rates? And now the consensus is starting to come back saying, well, the next Fed meeting, what they'll probably do is raise rates 50 basis points. I think 75 basis points is going to be out of the picture as we get more and more economic data. Okay, so what that's going to do is start bringing back a little more confidence in consumers. Okay, what that's going to do is starting to, subside on mortgage rates. Okay, we already know that the housing market is starting to really come down, contract. Okay, there's not as many houses out there, but we still haven't seen values start to crumble on the purchasing side. Yes, a lot of houses are out there, and the listing prices are starting to get reduced. But the final sales price, we still have a 17% year over year increase in housing. Okay, so basically my goal today was to educate you guys on why the inflation number is so important to you guys and why it might be the saving grace with a lot of the real estate market that's going out there, because we're going to have a lot of supply coming to the market, continually coming to the market. Okay, why is that? Well, forbearances stopped, meaning people have to now start making payments on their houses. Okay, the foreclosure moratoriums are over. So we're going to have a lot more people putting their existing homes on the market. And then with the supply chain issues starting to get fixed, we're starting to see the construction piece of the puzzle starting to really, they're concluding the house purchases or buildings. And that's going to drive a lot of additional supply to the market. So you have additional supply in the market. Okay, the demand's staying steady and actually decreasing. So you have more supply, less demand. What's happening is the house prices are so high, they're starting to come back down. The biggest reason there is there's not as many bidders on the property. So again, I always make an analogy. If I have one pen and you really need a pen, but I have 50 people that need this pen, they're going to keep bidding up and up and up the price. But if I have 100 pens and 100 different buyers, now me as the person in control of this pen, I have to start dropping down my price. Okay, now I'm reducing my profit margin, but I'm dropping my price to the pen, so every pen I have gets sold. I hope I didn't completely confuse you. But my goal is to educate you guys every day on just pieces of the puzzle. Okay, that's why I give you the news. So today's basically educational tool was, what is inflation and how is that playing a role in the whole economy? So let's get over to what's going on in the MBS market right now, and then I'm going to show you where rates are. So I go to my nifty charts here. And here's what's going on in the MBS market. It was yesterday we had a great rally, but today we're flat. Actually, we started up about 20 and we're down. You can see this is a live ticker. So this is how I monitor mortgage rates. Okay, so when you ask me, hey, Dan, what's going on with mortgage rates? Should I lock? Should I wait? What should I do? This is all the stuff. This is just one computer screen that I have. All right, so what I'm trying to monitor is mortgage rates for you guys. Why? Well, because in one single day, you can see mortgage rates spike maybe even a 0.25%. So let's get over to where mortgage rates are and let's put this into context so you guys get it. All right, so you can see right here, the 30-year fixed, these are the 6 top mortgage products out there. Okay, this is a survey done by Mortgage News Daily that I present to you guys every day. But the one interesting thing I want you guys to focus in on is right here. Let's look at just one of the cells. Look at the 15-year cell right here. That rate, if you pay attention to it closely, that rate went up 0.25% in one day. Okay, that's nuts. So what I try to teach you guys is what is happening in the economy, what's happening at the government level, what's happening at the Fed, what's happening worldwide that will play a role in what's going on with the mortgage rates. Because a rate that just went up 0.25% within 24 hours is probably going to add maybe $100, maybe a little bit more to your mortgage payment. Can you afford it? Can you even qualify anymore? So the biggest pieces of this puzzle is I want to put all this together for you so you understand out there, if you're looking to buy your first house, yes, house prices are rallying big. But what you have to really pay attention to is also where mortgage rates going. Okay, so here's my assumption on what's going to happen right now with the Fed and with all the news that's coming out right now. So you can go across here, you can see where mortgage rates are. Okay, basically across the board, they went up, and on the high level, on the 15-year, it went up 0.25%. This isn't my rate sheet. This isn't any individual company's rate sheets. These are the national averages for this scenario. Mortgage News Daily sends out a survey to mortgage lenders all over the country. And the scenario is this, and it's probably not your scenario, but I'm looking for a $500,000 purchase, buying a $500,000 home. Sorry, I still got a cold. It's killing me right now. I'm putting 20% down. I have a 740 credit score. That the home I'm buying is going to be my primary home, and it's a single family residency. So that's probably you out there if you're buying your first house. Not 500,000, but that scenario is probably looking, what you're looking at. You might not be putting the 20% down. So that's why these rates are not your rates. If you're looking at an FHA loan, you're putting 3.5% down. Okay, the rate's going to be a little bit different than this, but this is just the top 6 products. But if you look in here, you can see we're on a good path right now in the last couple weeks. Right through here, you can see the trajectory on the mortgage rates. Let's dive into the 15-year right now. You can see the 15-year, the 52-week high and low is right through here. Look at where the high was. The high was at 6.28. We'll round that to 6.25. We're right now at 5.18. We're over 1 full percentage point lower than where we were just 3-4 weeks ago. Okay, so if you've been sitting on the sidelines, or you finally got a house under contract, you got pre-approved, but you locked in 30 days ago, and your rate was 6.25. Can you do better today? Yes, you can do better today. That's why I do my report, to let you guys know what's going on daily, because maybe right now you can call us. We can review your loan product. You can't go back to the bank where you're at now because they already locked you in. They're going to say, well, it's going to cost you $10,000 to drop that rate down to where these rates are today. And you're like, I don't want to pay that much money. But yes, you don't want to pay that much money. That's why you need to call us. Okay, because just think about it. If you can change your lender right now and get a rate that's 1 full percent lower than where you're at now, how much more would you be able to save? Okay, maybe you're in the process, you did a lock and shop with somebody. You locked in. Well, now you're locked in. How much more of purchasing power could you qualify for at a rate that's 1% lower than it is today? So that's the reason why I do my report every day. I give you guys all the analysis behind things, what my thoughts are for the future. So let me give you my ideas on where I think we're going to go from here. You're going to continue to see the housing market stumble a little bit. I didn't say, let me pull me back on the screen so you can see me a little bit better. I didn't say the housing market's going to crash. I still don't think there's too much supply out there. And as long as jobs are robust as they are, people are making money. Wages are up 5% year over year. So the wages are there, okay, not to offset the house prices going up and mortgage rates going up, but at least puts you in a little bit better position there. But the jobs market being so steady that the demand for housing is going to be there because people have jobs and they have the income. Okay. So now on this time, when is the time to buy? Well, the timing to purchase a house is up to you. What is your financial positions? What is your job stability? How's your credit? How much money do you have in the bank? You have to have all those. You have to determine when the best time for you to buy. Once you determine that, I want to put you on the path to say, is your credit in line? Let's look at that first. While we're also kicking the tires to look to buy a property, let's talk to a realtor. What's your purchasing power? What kind of property can you buy in that price range? Then the next piece of this puzzle is you have to get your financing in place. Okay, you have to. So let's say you already got pre-qualified, but that lender locked you in at a rate. Okay, you can't go back to that lender and say, okay, I want a lower rate. So what do you do at this point? Are you stuck? No, you're not stuck. Guys, all I ask you to do is give us a call. I'm a federally chartered mortgage broker, which seems odd. There's very few mortgage brokers out there that are licensed all over the country. We're one of the only ones out there that can do that for you. Okay, so that's why I come out on a daily basis to educate you and inform you guys everything real estate. But we need to focus in on is the financing piece of the puzzle. So guys, I apologize. I got a bad cold. I'm trying to struggle through this. I greatly appreciate you hanging on with me on that. But that's our report for today. The Federal Reserve, what they're doing is they're raising rates to basically cool the markets. Well, what they're doing is actually working. Okay, we're starting to see a lot of the inflationary pieces of the puzzle on the consumer level and now also on the producer level coming down. So what does that mean? Is the Federal Reserve going to just come off and say, okay, we're not going to do anything from here on out. We're going to watch? No, they're going to keep on their projections on what they're going to do. But I think they took off 75 basis points. They stripped that from the table. Unless something happens from now to the next meeting, the news that's coming out right now is the jobs market is still going really well, but you're having inflation on the consumer side and the producer side really contracting. Okay, so the next Fed meeting, my anticipation is they're going to raise rates 50 basis points. That's going to give the market a little bit of a whoosh. Okay, and now the evaluations in the stock market are going to go up. Stock prices are going to go up. We've seen that in the last 24 to 48 hours. Why? Okay, why? Well, you got to think of it on the producer side. If the cost to produce this pen is dropping, well, now I have a higher profit margin, or I have the ability to start driving down my prices a little bit and still keep the same profit margins. Okay, so that's why you're seeing the stock market rally. You're going to start seeing housing applications start to uptick because mortgage rates are now a full percent lower than where we were a month ago. And then you're also going to see the housing market starting to stabilize because we have more inventory in the market and the demand is also there and going to probably uptick the latter part of this year because you're going to start seeing stability in the mortgage rates that aren't freaking people out anymore. Because there was a lot of people in the process of building houses that backed out because when they qualified 6, 8, 12 months ago and the rate was 3, and then the rate ran to 6, they could no longer qualify. And they didn't want that burden behind them because they were still having to wait for their house to get finished. So I'm sorry I'm all over the board today. I'm trying my best to do these lives. I got a cold. I'm struggling with everything, but I appreciate you guys watching. So if you would, please leave comments down below. I try to answer every one of them. But if you're in the process right now and you need a mortgage, or you got a mortgage and you're locked in and your mortgage company's saying nothing you can do. I know rates dropped, but you're locked in. So we can't really do anything. Watch if they say to you guys, you can't go anywhere else because they cannot lock you in because you're already locked in here. That is false. That is 100% inaccurate. And please reach out to us. We'd love to help. So God bless, guys. Thanks for watching. We are not going to have a Thursday event this evening because I feel like crap right now. But we'll be back next week. But stay tuned for tomorrow's live event. We don't know what's going to happen, but I can at least make sure that you're given the facts. So God bless, guys. Thanks for watching. I'll see you tomorrow. Bye-bye.